So thank you for tuning in. It is March the 12th, 2022, and we're live here at the Minnesota Real Estate Show every Saturday morning. The show is hosted by Mike Overson of Luminate Home Loans, Scott Wolmering of the We Team with RE/MAX Advantage Plus, and I'm Ryan O'Neill with the Minnesota Real Estate Team RE/MAX Advantage Plus. We appreciate you joining us here today. We've got a fun show planned. We're live from 10 a.m. to 11 a.m. Welcome your questions, comments, thoughts. 612-294-6949 is how you can join us at any time. Again, 612-294-6949 at any time. And again, we appreciate you tuning in here. Whether you're seeing us on Facebook, we're on LinkedIn, Instagram, YouTube, we're on all the social media channels. And Scott, we got a fun show, buddy.
It is. Welcome. If this is the first time you caught the show, welcome to it. If you're a return visitor, then welcome back. Like Ryan said, we're going to talk everything real estate and mortgage related as it relates to the Twin City market, which is a crazy market. If you are in the business and you're listening and you're a real estate agent, you're probably a little bit frustrated. And if you're a buyer, you're extremely frustrated. So we're going to talk about what's going on out there and why that's the case. If you haven't checked us out before, mnrealestateshow.com is the best way to find out about the team. And if you are looking at buying or selling, we'd love to help you out. You can also go there. There's a button called Ask the Big Brains. That's an email that comes directly to Ryan and I, and we'd love to help you.
Yeah, again, thanks for tuning in throughout the show. Don't hesitate to comment, whether you're, again, seeing us on Facebook, LinkedIn, wherever we might be, Instagram. Happy to take any questions you have, or again, call us or text us, 612-294-6949. Mike, we're getting ready to go live here in a little bit. I know interest rates are rising a little bit, but you're still sending out pre-approval letters as we speak, probably.
Yeah. You know, applications are up. Just purchase applications, right? Refis are one of those things, they come and go with rates. So purchase applications year to date so far up 26% for us.
26%. Wow.
Really? Closings are down 30%. Yeah. Purchase closings.
Yeah. Also want to, as we're going live on air now, want to invite on Adam Hartung with Midwest Money Management and Brad Sanford as well. Welcome, guys. Welcome.
Yes, thank you.
Here we go. We're going live on air. Good morning and welcome to the Minnesota Real Estate Show. Thanks for tuning in, everybody. It's March the 12th, 2022, and we are live here at Twin Cities News Talk, AM 1130, every Saturday morning for the Minnesota Real Estate Show, hosted by Scott Wolmering of the We Team with RE/MAX Advantage Plus, Mike Overson of Luminate Home Loans, and my name is Ryan O'Neill with the Minnesota Real Estate Team, RE/MAX Advantage Plus. We appreciate you joining us. We're also live on Facebook, on Instagram, LinkedIn, YouTube. Don't hesitate to check out the show and join us by questions, comments, thoughts. 612-294-6949. Have a great show planned today. A lot going on here in the Twin Cities in the real estate marketplace. And Scott, always good to see you. Good morning, bud.
Yeah, good to be here. Welcome and thanks for tuning in. We're here to the top of the hour, like Ryan said. It's an interactive show. Love your questions. You can text us at 612-294-6949. If you're watching us on Facebook, you can type in your questions there, and we will handle them as they roll in. You can also call that number at 612-294-6949 as well. If you haven't been to our website before, it's mnrealestateshow.com. Check us out. We would love to help you with any of your real estate needs. We are not radio personalities. We are real estate agents. That's how we make a living, so we'd love to help you out.
Yeah, again, we always welcome
you. I'm actually a radio personality. Ryan, not so much.
Scott is indeed. And thanks again. Thanks for tuning in, everybody. Try to bring a little bit of light to the day. I was telling Adam Hartung, who's going to be coming on a little bit this morning, Mike, when you wake up, you open up the news, it's hard to not want to crawl back into bed. All we hear is negative, negative, negative. So we try to bring a little bit of positive, maybe a little bit of light and upbeat to the day here. Right, Mike?
Absolutely. That's why I don't watch the news. That's why I don't know what's going on in the world right now. Because
I'm glued to it. I am glued to it. I wake up in the morning and And it's dire straits. It's not fun stuff.
Yeah, Mike, first segment, we always do dive in and we'll do a real estate update and we do a mortgage update just to give you kind of a quick snapshot of what is going on in the Twin Cities. After the first break, excited to have again Adam Hartung, Midwest Money Management, as well as Brad Sanford with Farmers Insurance. We've got some great content, some great segments coming up. But Mike, let's talk a little bit interest rate wise. Rates are rising. How is it affecting things? What's going on?
Rates are rising, but I do have some light to shine on today here, right? So rates are going up. Yes, they're higher than they were a year ago. So are home prices. Still a great time to buy if you look at historical rates. If you go back all the way to year 2000, so we just made a chart the other day. You go back to the year 2000. Anyone want to guess what the 30-year fixed was back then?
It was
7.
The average for that year.
It was 7.5.
Yeah, it's like 7.75.
Yeah.
Yeah, right. And that's not that long ago.
Yeah.
And if you look at this chart that I had here, and I think I shared it with you guys, we're still at the lowest. Outside of the last 15 months, because obviously we know what COVID did there, but we're still on the lowest in history, right? And so, the people that were maybe looking last year that were getting rates at 2.875, 3% flat, they're getting, 4 to 4.125 to 4.25 now. But the good news is guess what? That rate is not a forever rate, right? If rates go back down, because a lot of people are talking about a recession next year, if rates go back down, you can always refinance to a lower rate. So a lot of people are like, man, we missed our window. We shouldn't buy right now. I completely disagree because I think home prices, if you look a year from today, I think they're going to be higher than where they're at now.
Absolutely.
Interest rates, who knows what's going to happen there? They could be higher, they could be lower, but guess what? If they go lower, then great. You refinance into that lower rate, take advantage of it, and you're good to go.
Well, and like we talk about on the show all the time, you got to live somewhere, and rents are way higher than what your mortgage payment's going to be. I mean, a $400,000 house, you're still going to be $2,200 a month in a payment, roughly, depending on your down payment. And you can't rent an apartment for that. I mean, you can, but you're not going to like it. I mean, the ones that are newer, that are decent, are $2,500.
Right. Yeah. And if you took that same $400,000 house and rented that, I mean, what would that run you?
Oh gosh,
2,800.
Yeah, 3,000 probably.
Yeah.
Yeah, Mike Overson and his team at Luminate, they're working with clients, really all areas, all price ranges, whether it's a first-time home buyer, move-up buyers. Mike, purchase applications you said are up year to date, but probably closed files down.
Down. Yep. Yeah. So
30%.
Yeah. So our purchase applications this year to date versus last year at this time, we're up 26%. The number of closings is down 30%.
Which makes sense because we're going to get into the numbers here in a little bit. Our inventory is down by probably 20%, 15 to 20%. And so there's just not as many houses to sell.
Yeah.
Yeah, let's dive into those numbers. Let's take a look at where we are inventory wise year over year, comparatively. Again, 612-294-6949 is how you can join us. Appreciate you joining us if you're watching us on social media right now. Scott, so this week, new listings again down 13%, 1,104 new properties that came on the market. Pending sales down 15%. So a pretty significant drop in accepted purchase agreements, 964. And then the overall inventory is down 17%, 4,469 properties for sale. So we are seeing those pending sales drop, Scott. I think all of our fellow brokers, friends at the different companies in town probably are seeing the same thing, less sales happening, less inventory. But we should mention today is the start of the Parade of Homes. Today is the first day of the Parade of Homes. And so what effect will that have? And thoughts, Scott?
Well, yeah, I think, the numbers like we were just talking about, we're down 12% and we're down overall sales down around the same amount. I mean, that makes sense. And I think one of the biggest factors this year is last year at the beginning of the year, there was a lot of new construction sales. Builders were able to build, 10 a month, 15 a month. And then later in the year, that shut down to where, you couldn't get supplies, you couldn't get people. And so now all of a sudden you're building only 2 homes a month. And I think that's a big change in the market this year. I think we're just seeing that there's not as many new construction sales, which is bringing the number down.
Got to be sure to get out, support all of our great builders. I know I just saw a comment from Brian Wolf with Fieldstone, a fantastic company builder. Get out, check out the Parade of Homes. Mike, you going to get out and look at some homes?
Yeah, what street is that going down this year again?
The parade,
Yeah.
the parade. You got to get there early with your lawn chair.
Yeah. So is it the same street this year again?
Get the book. Get the books.
Yeah, get the book.
Holiday gas station.
Yeah, it is. I mean, it's great. Great that it is up again, going. I think next week's supposed to be 50. So, hey, we got spring is in the air there, young man.
It is. You know, I was just thinking about that number, 4,400 homes. And again, if you've listened to the show before, I'm a broken record on this, but a balanced market in the Twin Cities is about 19,000 homes. So we have 4,400 homes on the market, and that is absolutely crazy. And when I look at the new listings this week, it's 1,100. You know, in a market where we're at 19,000, that's a relatively consistent number, 1,100 to 1,300 homes that would come on. The difference is they would stay on. You know, now if you're under 500,000, the time on market's probably 45 seconds. You know, if you go over that, obviously it gets a little bit longer, but they're just getting gobbled up. 1,100 homes come on, 1,100 homes go off.
Here's an interesting thought though to share with that, Scott, is that I got a message this week from a seller. It sounds like they've had their home on for now. It's been a little over 2 weeks, and they have not seen nearly the activity they were expecting.
What price range is that?
They didn't give a lot of detail on it, but I think part of the message to everyone is that not everything is selling immediately. And I know some agents, a lot of buyers agents, that will specifically look for properties that have days on market, maybe 10 days or more, 15 days or more, to try to help their buyers find a property. But that's the interesting thing. Not everything is selling quickly.
Yeah, no, it is. I mean, we got two markets. You know, we've got the, outer ring suburbs. You got to throw the Edinas and the Wyzettas and whatever out of it, but just your normal outer ring suburbs. You've got the under 500 market, which is absolutely crazy, 20, 30 offers every time you list it. And then you've got the, 6, 7, 800, 900 $1 million properties. Those always take a little bit longer. And that's kind of how our market's divided.
Yeah, good stuff. We're already at the halfway point, guys, and we're going to continue the discussion after the break here at the Minnesota Real Estate Show. 612-294-6949 is how you can join us by phone or by text, or again, comment on Facebook, LinkedIn, YouTube, Instagram, wherever you might be watching. We do appreciate it. Got a fun rest of the show coming up. This is the Minnesota Real Estate Show.
So, Ryan,
Yeah.
when you're talking about the properties that are not selling right now,
Yeah.
is it a price range? Is it because they're overpriced for what they are? Is it because there's something fundamentally wrong with the properties and people are just being picky, even though there's not a lot of inventory? I'm curious, what are the properties that are not selling right now?
Yeah, I mean, price is always kind of the biggest determinant of lack of demand, or people just not going through it. You'll see sometimes where they'll have significant price drops. So I would say a lot of times it is a price. There could be something just off with the property too. I mean, something just really unappealing.
Yeah.
But again, it's always a price.
But there's a certain price that you have to go to. Then
Right.
someone will buy it, and that'll offset the funkiness of whatever.
Exactly. It really amazes me that with as low inventory as we have, I mean, where there's almost nothing, that somebody doesn't say, well, we have to buy something, even if we're not going to stay on this property because of XYZ factor. It surprises me that those properties don't sell unless they're just overpriced.
Well, and it's an interesting, again, I'm going to talk about the under 500 market. So the under 500 market, if you get, and it's human nature, it's the best selling market we've ever had in the history of the planet. Sellers know that. So they're trying to grab that extra 10, 15,000 bucks. And you can overprice yourself in this market at that 500 where you're way better off. So if the house is worth 500, you're almost better off going at 450, which sounds crazy, but I mean, the last 4 houses I've written on, it was $39,000 to $92,000 over was the range of all the offers that were written. Where if you had kind of gone to that next upper step, you then eliminate maybe 15 offers. And so you really end up hurting yourself. people are competitive at nature. You want to get them in to be competitive and to bid on your house.
Here's a question. Again, thanks for your comments too, Brian. Good morning. Inga, good morning. From overseas, she's watching us in northern Italy, a friend of mine. So thanks for joining us. It's probably late over there, but thanks for tuning in. Questions. This one says, is the low inventory reason enough to not sell our place? We moved into a townhome last minute 18 months ago. This was always seen as a temporary home. We hate paying HOA fees and do not want to move into another townhome community. How much of this limited inventory is townhomes? And then he also said, I was told a fixer-upper would be an option to help getting into a place. How would a mortgage work to have an extra money to apply to the remodel? Any questions? Any thoughts on that, guys?
Yeah, I mean, so
Townhomes.
the limited inventory on townhomes, it's across the board. So whether it's townhomes or single family homes, it's just limited out there. So to answer your question, should you sell right now? The short answer is yes. It's the best selling market we've ever had. So if you bought a home 18 months ago, and let's say it's 200 grand, it's probably now worth about 240. And then depending on the price range that you're buying into, yeah, it's the best time to sell.
Here we go. We're going back live on air. We'll keep talking about that question. Thank you. Hey, welcome back, everybody. Thanks for tuning in. Hope the weekend is going well. We've got 50s coming next week in Minnesota. It is warming up. And guys, questions, comments, thoughts, anytime throughout the show. You're welcome to join us. Scott, during the break, Mike, Adam, we were talking about a question that came in regarding townhomes and low inventory. He also followed up saying that I was told a fixer-upper property would be an option to help getting into a place. How would a mortgage work to have extra money to apply to the remodel?
So if they got a place to sell and they're going to be making money on that sale, what I would suggest is just put as little down as possible on the one you're going to be buying, and then use your funds that you already have from that sale for the rehab. Now, if the property is in a bad enough condition where you can't get a standard loan on it, then you got to do a construction loan.
Yeah, and I would just add to that, it's a common thought that people have that I should buy a bank owned property or I should buy a fixer upper, and there won't be as much competition. It's the complete opposite. There's 10 times the amount of competition on anything that can be fixed up and rehab where you can actually make money on it. I mean, I've got 25 guys that do that for a living. They haven't touched anything in the inner metro in the last 2 years. They've had to go out to Rochester. They've had to go out, to Faribault. They've had to, get out of here. So there are no deals out there that are fixer uppers. So that's a no on that.
Yeah, appreciate your questions, though, Paul. Thank you. Thanks for tuning in. We're going to transition now to our friend and partner, Adam Hartung. Adam is a certified financial planner professional and an accredited investment fiduciary. He is the president and founder of Midwest Money Management, located at 17316 Kenyon Avenue in Lakeville, Minnesota. Securities offered through Parkland Securities, LLC, member FINRA and SIPC. Fee-based investment advisory services offered through Sigma Planning Corporation, a registered investment advisor. Midwest Money Management is independent of Parkland Securities, LLC, and SPC. Hey, good morning to you, bud.
Yeah, good morning. So, Ryan, you promised listeners that we would have a fun, upbeat radio show.
Yes.
I think.
Well, that's why we brought you.
Right,
on.
I think
Yeah.
we best that we just skip my section just entirely because.
No, always we love having Adam Hartung on because he helps us take a look at kind of the entire financial picture for those that like understanding, what's going on in the world, inflation, gas prices, home prices. How does this affect us all? Adam, you always do a really nice job of bringing this back to us. So we really appreciate that.
I will try to do it in a fun and optimistic way.
What do you got for us though today?
Again, as far as an update, there isn't a whole lot positive to point to right now when it comes to the market. I mean, that's really the reality. The stock market is down roughly 12% for the year. The bond market is also down almost 5% for the year. And if you guys remember, I've been saying this whole idea that you offset stock risk with bonds is not going to work in a rising interest rate environment. And we are seeing the results of that. So if you had a traditional 60-40 portfolio that's supposed to be balanced, you got hit on both sides and you're down pretty significantly for the year. Inflation just hit 7.9. And by the way, that's really, we talk a lot about the last time we had high inflation back in the 70s and 80s. And what most people don't realize is that in 1990, the government changed the official way that we calculate inflation. And so that 7.9% number is not even comparable to the teens numbers that we saw in the 70s and 80s, because we don't calculate inflation the same way. In fact, if we calculated inflation today the way that we did the last time we were in a high inflation environment, we'd be well above 10% inflation right now. So, just know it doesn't mean that inflation numbers are wrong per se. It depends on how you want to look at it, but it is not an apples to apples comparison if you look at the numbers from today versus the numbers, back in the 70s and 80s.
Well, and it is going to hit people hard. I just sent a TikTok out to Kevin Curtis and Ryan O'Neill, and it was a truck driver filling up his diesel truck, and it was $1,100. And his point was, folks, the way you get milk, the way you get eggs, the way you get ice cream is we drive it to you. So if you don't think that that's going to hit you in the face, it's going to hit you in the face.
And by the way, Russia could surrender and back out of Ukraine tomorrow, and oil prices and gas prices would still continue higher in the United States. I mean, I'm not saying that it has no impact, because it does. It definitely, but for politicians and our president to come out and say blame Russia for this is ridiculous. The vast majority of the gas rise this year, the inflation, all these things were happening before the war. I mean, as politicians do, they are using it as an excuse to point their finger and say, don't blame us, blame somebody else. But the reality is that almost 50% of the dollars circulating in the United States today were printed in the last 2.5 years since January of 2020. So the reason
Wait, say that again.
Almost 50% of all of the dollars, US dollars, that are in circulation in the economy and in the marketplace, global marketplace, were printed in the last 2 years. 50%.
Which is not real money.
It's real money now because we say it's real money. But you want to know where inflation comes from? It comes from we printed 50% of the dollars in the last 2 years. You can't print that amount of money and not have inflation. So here's the conundrum that we're in. We have high inflation. The Fed has said, and they came out and reiterated, that they are going to stick to their guns and they're going to raise interest rates. And more importantly than raising interest rates is they need to stop printing money. Because when you hear modern monetary theory or quantitative easing, these are just egghead words the academics manufactured and created. To what it really means is we're printing money. Every time they say quantitative easing, remember that's printing money. They say modern monetary theory, remember that's printing money. That's what we've been doing. And it's absolutely crazy. And so here's what, next week the Fed meets again. And I'll tell you, it's going to be really interesting to see if they stick to their guns, which they need to. So they need to raise interest rates and they need to stop printing money. And if they do that, it's going to get worse before it gets better. The stock market is probably going to continue to fall. I think a lot of bad things are going to happen. The flip side is, and this is my fear, is that the Fed comes out and says, well, and they blame the war on Russia and say, yeah, inflation's high, but we didn't know about the war. And so we're going to raise rates 0.25% instead of 50 basis points. And then, oh, by the way, we're going to keep printing money, which is the more important. Don't pay attention to whether they raise rates. Listen to whether or not they're going to keep printing money to buy bonds every month, because that's what's driving inflation right now. And the way the Fed has dealt with this for the last decade is like treating a heroin patient who every time they go through withdrawals, we say, okay, well, if we just give them a little more heroin, they'll feel better. And that works, right? They feel better, everything is good. But eventually you have to go through withdrawals and have the pain, or your patient dies. And I really believe that is literally where we are at right now. We need to go through withdrawal. We need to stop printing money.
Go through rehab.
It's gonna hurt.
We do.
Is it a 28-day program?
I wish it was 28 days. I wish it was 28 days, and it's gonna take longer than that. But I mean, there is. I mean, if they do what is necessary, and Volcker did this back in the 80s, it's going to cause short-term pain. But if we don't do it, I just don't. I don't see another way out.
What do you think, Mike? You're deep in thought.
It's absolutely accurate. I mean, the more you print money, it's just like money has never solved money problems. right?
Right.
You know, if someone who has money problems, you don't just give them more money. That doesn't solve the problem. That's kind of exactly what happened here, right? And so now we're going to reap the repercussions of that for sure. And as long as it took to print the money and get it out there and do all this stuff, you know, a couple of years, it's going to take just as long or longer to reverse that. And it's not going to, you know, it's not going to feel good.
No.
We're going to have to go through the pain, but it's going to be a necessary deal. Otherwise, the issue is just going to
So we had a comment come in, and I think it's good to maybe talk about this. Is hey, we don't want politics, but is this politics, Adam?
You know, unfortunately, everything has become politics. I mean, I don't think it should be politics. I mean, this should be just basic economic principles. So I'm not trying to be political, and it's certainly not politics in the side that it's one political party or another. I mean, this has been going on for 10 years, and so
Right.
I'm not blaming one political party. So if that's what you mean by politics, I'm not being political. But the reality is, this is just insane. This is insane monetary policy, and you know, both sides are out of control.
That's good. That's good. Adam will take a stand, won't he, guys? You know what I mean? Scott always gives me a bad time. I'm sunshine and rainbows over here, but it's really good info.
So one thing I want to point out is that when they say the Feds are going to raise rates, they're not talking about mortgage rates. They're talking about short-term rates, home equity lines of credit, you know, auto loans, more consumer type of debt. Mortgage rates, so fixed mortgage rates are long-term rates, right? 30-year fixed and stuff like that. So typically when the Feds raise rates, the short-term rates, we see a short but definite lowering of the long-term rates immediately after.
So what'll be interesting to see, depending on what the Fed does and how this plays out, is, remember I said there were two things to look at. One is whether they raise rates, and you're right, that's the short-term rates. Doesn't affect mortgage interest rates really directly at all. But the printing of money does affect long-term interest rates, because what they've been doing with the money that they print every month is that they've been buying long-term mortgage bonds or treasury bonds, which then do affect mortgage rates and mortgage bonds. And that does bring down long-term interest rates. So if they do stop printing money to buy those bonds, it will lead, again, maybe not immediately, but it will lead to higher long-term rates as well.
Adam Hartung, Midwest Money Management. Best way for people to connect with you. And again, part of the reason the strategies you do is to be able to weather these storms.
That's right. And I say this not to be sensationalist, but the indicators that we follow are the most uniformly negative across the board that they've ever been in the 20 years plus that I've been doing this. Our two primary investment models are tactical models. That we have a tactical stock model and tactical bond model, where we review indicators and make changes on a daily basis. Both of those models are 100% in cash right now. So we are completely out of all traditional stocks and bonds. The only meaningful holdings that we have in our investment portfolio right now are gold, energy, and basic materials, and those have all done very well. So, you know, if you're somebody out there who either doesn't work with an advisor and you're worried about, you know, the risk that you have in your portfolio, or you're talking to your advisor and they say, well, you know, this is how you do things, just hold on to it and ride it out and hope everything gets better, because it will eventually. You know, there is another alternative, and that's to work with someone like us that takes a much more active, tactical approach, and will move your money to cash in safety, you know, for the time being. That doesn't mean it's a long-term holding place, but, you know, sometimes when assets are falling, the only rational thing to do is sit on the sideline and just say, we're going to wait and see what happens and find a better place to enter back in. That's what we do for our clients. If you would like to talk to us, you can find us online at mnrealestateshow.com or at midwestmoneymanagement.com, or you can call our office directly at 651-204-3000. Again, that's 651-204-3000, and we'd be happy to sit down and just review your situation.
Nice job, buddy. That was sunshine and rainbows.
I feel better already. I feel better already.
There is a way out.
That's right.
I'm telling you,
No, it's good. Great info. Great info. We appreciate you, Adam. You do a wonderful job. Encourage people to reach out to Adam Hartung and his team. Scott?
Hey, before the break, just wanted to hit a new listing that just went on here a day ago. 18460 Pathfinder in Eden Prairie, listed at $950,000. 5-bedroom, 4-bath. Absolutely an exceptional home, meticulously maintained. 4-season porch that overlooks a great outdoor living space. Really, really big open floor plan, and again, just spotless. So check that out. It's 18460 Pathfinder in Eden Prairie for $950,000. If you can't write that down because you're driving, you can also go to my Facebook page. It's Scott Wolmering, and it's right there.
Yeah, very cool. I saw the pictures too. Beautiful home, wonderful home. Hey, halfway point of the show. Thanks for tuning in, whether on Twin Cities News Talk or on social media. We'll be back after the break. Thanks everybody for tuning in, bringing a lot of content at you here today. Some hard things to talk about. Brad, we got to welcome Brad on. Brad's been patiently listening to us all here. Brad Sanford with Farmers Insurance. Welcome, bud. Great to have you on.
Thank you. It's exciting to be here. Great to be part of the team. I wanted to jump in and start saying things.
Oh, man. From an insurance standpoint, a lot going on. You've been in the insurance world a long time.
Yes, and I've been in the finance world, a bank manager and a commercial lender for a long time. So
nice.
I've seen all sides of it. Yeah, so I understand the mortgage, I understand the real estate, I understand the financial side. I had a buddy that said right away, we should just spend the money we need to get out of this, and then hopefully we recover quicker than everybody else. And I had the same eyes you did. I went, I don't know if that's the right way to go about it, but so that's interesting. Great perspective. I enjoyed what you said. That was good information.
Thanks.
Yeah, Adam is full of sunshine and rainbow. Hey, you can join us with comments too. Comment on the social media stream. At any point here, please don't hesitate to do that.
Well, and I actually, just back to Adam, I actually watch his streams before I go to bed. Because it calms me down,
yeah.
puts me in a place of zen.
Yeah.
You can find them on the podcast.
Yeah, this TikTok video that we saw that Scott was mentioning was very interesting because it was a truck driver who was transporting milk, and it was just obviously making a point, saying, "Look, I just spent $1,100 to fill up my truck," and it was pretty powerful.
It was
very powerful.
And he said, "That's how you get milk. That's how you get eggs. They're in refrigerated trucks. There's no other way to get it to you. So if you don't think it's going to get that, those prices are going to skyrocket, they are."
We got it easy here, gas prices wise, versus like you look at like Portland,
or California.
California. I mean, they're hitting little over $7 a gallon right now.
So when will it though, or how will it affect the real estate buyer demand? I mean, like you said, the mortgage applications are higher than ever. I mean, what gives?
Well, again, I mean, I go back to the same old point, which is you got to live somewhere.
What's the alternative?
Yeah, you got to live somewhere. So it's still way cheaper to buy a house than it is to rent. You got to put a roof over your head.
You build wealth with it. I mean, it's like
yeah. So I don't see it. I don't see it affecting anything. And the reality is the first time home buyer that is going to get hit the hardest with this. They're kind of out of the market for a lot of it, unless they're going out, the Elk River or Big Lake and whatever. I think last time when we had the numbers from your gal, it was like out of all of the 390 accepted offers or something, and there were 0 FHA offers accepted.
Yeah.
I mean, that's never happened. I mean,
very hard.
Yeah, very hard.
For a lot of the FHA buyers, VA buyers, what we're seeing is you're having to either find something pre-market before it hits MLS, or perhaps it's a letter that was sent by your agent to a neighborhood, to a home. It was door knocking to find a specific property where there isn't that competition that you have, to Scott's point, because a lot of home sellers are just not accepting those offers right now. And Mike, you're probably seeing it too on the financing end.
Yeah, it's tough. I mean, we try to get everyone to be approved for a conventional loan if possible, even though it might not be the best financial route for them. It's the only legitimate shot to get an offer accepted. So it's like, look, we're gonna get you into the house with this conventional loan, and then we'll take a look at the situation. If it makes sense to then refinance to an FHA loan, or hopefully if rates go down a little bit, or we improve your credit score, whatever the case may be, and we can refinance you down the road to get you in a better position, then great. But yeah, I mean, it's tough.
Hey, one quick thought, maybe you guys can comment on. I think people forget too. Last week I shared a stat that in 2021, the average homeowner generated an additional $52,000 worth of equity. This is across the United States. Now, again, equity isn't something you can immediately take and go buy lunch with today. But to your point, are we back?
Yeah.
Oh, we're back. sorry. I'm off. We'll go back live on air. Hey, thanks for tuning in, everybody. We appreciate it. Social media, LinkedIn, Facebook, YouTube, Instagram. You can see Mr. Wolmering in person and hear his sunshine and rainbows when we're hearing about dire predictions with everything else going on in the world. But hey, just real quick, guys, before we dive in with Brad Sanford, Farmers Insurance, we were just talking about in 2021, average homeowner in the United States generated $52,000 worth of equity by owning. Now, again, that's equity. You can't go out and have lunch with it today. But Mike, you brought up a point that people forget the wealth building aspect of owning real estate. And for a lot of families, a lot of young families, a lot of just everybody, that generational wealth is something to not forget. Instead of saying, hey, boy, the prices are so high, I'm just going to rent. You're missing out on that boat. I don't know.
Do you guys know how many more times wealthy homeowners are versus renters?
No.
On average?
No.
So on average, homeowners are 17 times more wealthy than renters. And a lot of it has to do with the equity that they have in their house. And that's contributes to most of that right there, is because when you make a rent payment, you're not gaining any equity, right? That money is just gone and you get to live in that place for the next 30 days. When you make that payment on a house, you're paying your loan balance down. Your home is appreciating in value. You got that gap spreading in there. And that's why homeowners on average are 17 times more wealthy than renters.
Well, and remember this, if you're someone that's tuned in the show for all the years we've been doing it, or at least in the last year, all the phone calls we had last year about, I don't want to buy in this market, it's at the top of the market. And we were saying, no, there's 7,000 homes on the market. It's going to continue to go up. We're having those same discussions now. I don't want to buy in this market. It's at the height of the market. We have 4,400 homes on the market. It is going to continue to appreciate. That's just basic finance.
Yeah, it is. Let's welcome on Brad Sanford with Farmers Insurance. He's our newest partner. Excited to have him with us. Appreciate you so patiently listening to us talk about all kinds of things here, Brad.
Well, it's great to be around so many intelligent people that know what they're talking about and what they're doing. It's awesome to listen to you guys talk, and you guys really know what you're talking about. It's a great wealth that you guys bring to your listeners.
A lot of good stuff happening in the insurance world, and specifically, we received some questions earlier in the week regarding umbrella policies. Maybe talk about that a little bit.
Yeah, I was going to try and make it fun, and I thought of Justin Timberlake, bringing sexy back and how you make insurance fun and sexy. But, I think the way that I look at insurance is it's an investment in you guys, right? It's working with you to protect your assets. I always ask my clients, do you look at insurance as an expense, or do you look at it as protecting your assets? And one of those products that can help you protect your assets is an umbrella policy. Farmers is one of the few companies in the nation that allow your umbrella to protect your underinsured and your uninsured. I was looking at a statistic the other day that there are 13% drivers in Minnesota that are uninsured. And then underinsured, the state minimum is 30, 60, 10, which means that per person, your insurance company will pay $30,000, right? And then per accident, they'll pay up to $60,000, but for property damage, only $10,000.
Yeah, and if there's any hospital time at all, that's gone. I mean, that's gone like that.
Yeah, absolutely. So an umbrella is a great way. And what I always tell my clients when they ask me, well, how much of an umbrella should you have? I always say, you've worked so hard during your life. How much of those investments do you want to keep? Right. So if it's $1 million, $3 million, up to 10 million, what is it that you want to keep if something catastrophic were to happen? And so that's kind of where you go.
Have you seen anything though? I mean, again, with insurance, sometimes people, personally, have you seen situations where I can imagine bad things happen? I mean, any stories or anything where along those lines?
Oh, there's all kinds of stories. I don't want to scare people, but the one that comes to mind is, if you have kids and the kid says, hey, can I take the car? Right. And they're going to dinner with this. In this one case, she was going to dinner with her boyfriend. She got into an accident. It was her fault. She broke her boyfriend's eye socket, fractured his skull, and they had a $100,000 coverage.
Oh, wow.
So the remaining $800,000, because the lawsuit was total $900,000, had to come out of their pocket. So
Oh
they
my
had to
gosh.
liquidate assets and investments and stuff. Yeah.
Well, and you were telling a story off air of I believe a doctor client of yours that ended up needing $7 million to cover it.
Every bit of that 7 million. Yeah. And oddly enough, some states, they will tell the jury if you have an umbrella, and guess what number they come back to for a lawsuit.
At the numbers like an appraiser.
Yeah.
How spendy are these though? I mean, is this something normal? You call your insurance person and say, look, I need an umbrella, or how does that work?
Yeah, the umbrella itself to cover your liabilities isn't as much. It's when you start adding second properties, you start adding boats, ATVs, those kinds of things. I will tell you the uninsured and underinsured addition that you add will probably add another 70% of that same premium, because it's a big deal. There's a lot of people that are underinsured and uninsured. Like in Florida, I mean, you don't even have to have some of the coverages that you have to have here in Minnesota. So,
well, and it's one of those things. Insurance, it's insurance. I mean, it's for what you never want to have happen that actually happens, and you're never in the situation until you're in the situation, and then it gets ugly quick.
Absolutely, and that's why Farmers has won gold, been awarded gold last 2 years in a row for customer service, and that's what you pay your premiums for, right? So when something does happen, you want us to be there, and that's exactly what Farmers does.
You've probably seen too with a lot of landlords, a lot of investors that owning multiple properties, seems like a no-brainer to get an umbrella, to have something like that in place.
We were talking about that off air, and I think that's an absolute must for any investor. Absolutely, because you don't know what's going to happen in that property, right? And you don't want one of those properties to affect the rest of your investments. So.
Yeah, very interesting stuff. We're already at the 3/4 break here. We're going to continue the discussion. Again, Brad Sanford, Farmers Insurance. If you have questions at all, comment on the Facebook Live or 612-294-6949. Scott, before the break, did want to touch on Bill Ebert with RE/MAX Advantage Plus. The Minnesota real estate team has a great listing in Hudson. This property is coming soon right now. It is going active on the market on the 18th of this month, but it's 2009 Stone Pine Avenue in Hudson, Wisconsin. It's listed for $389,900, and it's a 3-bed, 2-bath brick front home. It's in the heart of the Stone Pine development. Bill says it's a cozy Hans Hagen built newer home. We've got newer appliances, HVAC, and roof. It's got an extra large fenced-in backyard, decorated with wonderful red and yellow maple trees as well. Beautiful home when you look at the photos here. Check this one out online, 2009 Stone Pine Avenue in Hudson, Wisconsin, $389,900, listed again by Bill Ebert. This is the Minnesota Real Estate Show. Adam, have you seen with your clients too, talking about insurance, just all kinds of insurance nightmares and headaches, I bet, over the years, and having a trusted partner like this is important?
Yeah, I mean, what you said about having customer service on the insurance side is so important, because I mean, obviously there's first what your contract says and what it actually means, and you got to have somebody that can explain that to you. And then second is when you do need something, you're at a point where you're at your most vulnerable.
Yeah.
This is not a time when you want to deal with somebody fighting with you, or so yeah.
I always hear people say that it's you only pay for what you need. I wish that this job was that easy, right? You know what you need? All right, here you go. But it's not that easy. I mean, you have to make sure you have conversations with people and make sure that they understand the coverage that they have and what their gaps are.
So I was thinking this last year about insurance quite a bit on replacement costs. If you have your house burns down, and how many people would be drastically underinsured because of the cost of lumber and the cost of everything. So they might be covered at this amount, which a few years ago you could rebuild your house for, and in this last year you're going to be able to cover half your house.
Right, and that's why insurance companies try to take what your neighborhood has increased in value, and we try and raise what the value of your home is to try and keep up with that. But you're absolutely right. I mean, lumber went through the roof My wife and I, we finished our basement and we budgeted about 7,000. It ended up being 16,000.
A
Hmm.
sheet of, a
Lumber.
sheet of plywood is $89.
That's amazing.
A sheet of plywood. That's
Which used to be what?
16 bucks or something. I mean, $89. I saw that the other day. I could not believe it.
Did you buy it?
No, I did not.
So what in that case though? So the insurance company should be adjusting things though, right?
We
So
do, yep. And every year your agent should have what we have at Farmers, a farmers friendly review, kind of go through everything that, what's increased, and for auto, if it's decreased, talk to them about those kinds of things and have a conversation around it. Yep.
Is there like some sort of auto where you're just going to automatically adjust stuff, or you have to get the okay? Because obviously if you're adjusting like, hey, we need more coverage on there, I'm guessing the cost goes up,
It does, yeah.
right? So
We have that conversation and then we figure out, do you have marble? Do you have wood floors? Do you have tile? That kind of thing. Because as you said, everything's gone up,
Yeah.
right? With inflation, those first time home buyers, everything's costing them more. Can they save enough money to get that down payment? Is a real struggle, right? So, yeah, and we have you guys go, the home buyers, have them sign off on all the things that are in their house and then we adjust it to that, yeah.
yeah, it's a really good point. It's also drives home an important point to have somebody who's watching your account, someone like Brad, who is going to advise you to know, hey, how are you from an insurance standpoint? Because that would be an unhappy day.
Yes.
Absolutely.
Here we go. We're going back live on air for the final segment. Thanks for tuning in, everybody. Hey, welcome back. Heads up, Scott. Heads up. We got a listing in Minnetonka, 3317 Lake Shore Drive in Minnetonka, listed for $399,900. It's a 3-bed, 2-bath, 2-car garage home. There was just a very large price drop on this one. Again, 3317 Lake Shore Drive in Minnetonka, 3-bed, 2-bath, 2-car garage, listed with Bruce Williams, Remax Advantage Plus, and the Minnesota real estate team. He said it's a 1.5 blocks from the lake, and it was just dropped yesterday from $500,000 down to $400,000 for a quick sale, a job transfer. Wow, that's check that one out.
That's a big drop. That sounds like a good deal.
Yeah, it is a very cool property. So check that one out, guys. We're on the home stretch here. Brad, we've been talking a little bit, again, talking insurance over in the break. Had a thought that came in about existing homeowners and adjusting your insurance. Maybe just talk a little bit about your firm and also how people can connect with you.
So it is the Farmers Brad Sanford Agency. I am in Arden Hills on West County Road, F for Farmers. And so you guys can get a hold of me at 651-690-2076. And the conversation about the value of your home and making sure that your home is covered for what is actually inside of it. And to Scott's point is prices have gone up. If God forbid something were to happen, you wouldn't want to be short money. You want to get your house back. That's what insurance is for, is to put you back where you were before that peril happened.
Yeah, you don't want to live in a 5,000 square foot 2-story, have your home burned down, and then only be able to build a split level. I mean, it's the reality
Right.
of what the cost of lumber and everything's gone up.
It would
So
look different on the lot, wouldn't it?
Yeah, a little bit.
So question though for you, Brad, if I'm a existing homeowner or I'm listening, should I every year be looking at my statement and saying, is this enough? Should I contact my agent, Scott Walmering? Scott, do a market analysis. Here's what I'm insured for. Should homeowners be doing this?
Yeah, I think you have to. It's as you guys were pointing out, it's one of the biggest investments that a regular person has, right? So you want to make sure that you're keeping up with the value and making sure that it is fully protected. So having one of you professionals go out and say, hey, this is what it's worth, and having someone, your agent, take a look at all of that and go through everything is the best idea. Great approach.
We are excited to have you on board. Welcome.
Thanks.
Yeah, welcome.
I love
Welcome.
being here.
Yeah, welcome. And I encourage folks, again, go to mnrealestateshow.com. If you go to home insurance, there you will see Brad and his team doing an awesome job. Very excited to have him on board. question came in here saying, Adam Hartung, do you have anything else positive to share with us, Adam?
That one caught me off
If
guard.
if you dig deep enough, Adam, is there something in there that's
Yeah, you said it's supposed to be warmer next week, right?
Right.
Yeah.
So that's
You got that to look forward to.
I mean, here's one crazy thing. I was looking, we were just talking with amongst my sister and my wife and stuff the other day. Last year, we actually had our pontoon on our lake on March 27th.
Huh.
Water was completely open. We had our pontoon out there. It's March 12th, and we still got 2 feet of ice right now. I'm like, that ain't happening this year. It's crazy that this winter was overall average thing. Like, it's way colder than last year.
Yeah.
And there's still a ton of ice on the lakes, and now, unfortunately, we're going to have to wait longer.
Well, I remember 3 years ago, it was the second week in March, and we and Legends, the golf course that I play in Prior Lake, opened up, and it was like 78 degrees.
Dang.
Yeah, and it was the second week of March, because I've always said you can get on the golf course about middle of April, and to me it was like a month ahead of time.
Crazy.
I was thinking in the break that with the low inventory of houses, you guys should start selling houses the way they're selling cars now. I went to the car dealership last week, and I wanted to test drive a car. They said, we have 0 cars. There's not a single car I could drive. But if you give us $1,000, we'll put you on a list. And somewhere between 6 months and a year from now, we'll call you when there's a car that you can come drive and then possibly buy it.
That's what builders are doing.
Hey, you should guess. Is it what builders?
A lot of builders are.
Yeah, they're
Put
going
people on a list. And when your number comes up, now you can go look at a house.
Yeah, they're basically going to a lottery. I mean, it's crazy. Yeah.
Yeah, you think about that though. Again, just from a consumer's perspective, very unusual time. But again, if you are renting right now, maybe you're thinking about purchasing. Don't lose hope that you can't purchase a home. There are still transactions happening. There are still closings happening. It is obviously more difficult than last year. There's less sales, but there's still deals getting done. And so, I think part of it is that you can't lose hope that you can become a first-time home buyer, that you could get that first home. It is very important to have a very good agent, he or she, who's helping you through the process, that knows the business, that knows the industry, that frankly knows other agents from other companies. The relationship part of this business is really important. And sometimes it's probably like a lot of industries, but not all real estate agents are created equal. You need to have somebody that really knows what you're going to do and is motivated to look off market to find properties. You can't just say, oh, there's nothing on MLS, Scott. I'm not going to find you anything. You need somebody that's got a little jump in their step, a little extra energy, that's going to wake up early, don't knock on some doors. That's how deals are getting done.
It is, and they were getting done that way last year. I mean, there was the highest sale year of actual transactions that we've had.
Right.
And we had half the inventory that we should have on the market. So where did those sales come from? They weren't coming from MLS. They were coming from agents that are, like Ryan said, knocking on doors and kicking dust up and figuring out a way to find you a house.
Yeah, that's what Brian Buffini said. He's got an Irish accent. If you ever listen to him, it's just, he's a great speaker. But he said, we don't have an inventory. There's not an inventory problem. He said, if you look at 2021, there were more sales ever, closed sales, in the history of real estate. And so it is an MLS listed inventory problem. Absolutely. Yeah. So it's just different kind of work, guys. It makes you think about, all right, well, what am I going to do to find a house? Am I going to be creative, Mike?
Right. So what are you doing? So, I mean, we had an offer last Saturday with an agent on the team. And she's like, hey, made an offer on here. There's multiple offers. Will you call the listing agent? I'll call every single listing agent and every single pre-approval letter I send out. And I called the listing agent, and he knew me from before. We had done a deal together, and he actually said, oh, hey, Mike, how you doing? And this was Saturday at like 7 p.m. when I called him. Right. And so I was like, oh, hey, I'm just, I got my kids at the arcade or whatever. And he's like, yeah, so we got 5 offers on there, and they were due at like 8 p.m. that night, right? Or 9 o'clock the next morning or something. Like, we were right up to the deadline of getting the offer in. And he's like, yeah, so you're offer number 7 or number 8 or something. He's like, but you're the only loan officer out of all the offers that have called me.
Good.
So far. And so I'm like, well, I can tell you, you've worked with me before, and I can tell you these people are solid. There's no issues on the loan side of things. So, I mean, hopefully we'll be working together on another one.
Yeah.
Sure enough, we got it accepted. Now we're moving forward.
Well, and to Ryan's point, relationships in this business are extremely important because, again, when you're looking at an offer on a house, you're looking obviously for the net number for your seller. You're looking for the least amount of contingencies. You're looking for the buyer to be solid, and you're also looking for no hassles. And so, if Ryan O'Neill or Jason Walgrave or Bryce Shanky, tons of great agents, if they're writing the offer and their buyer is willing to go to the number, I want to work with them. And, and that's a part of it that is really, really out there. So not only are you looking for an agent that's a good listing agent, but you're looking for someone that everybody knows. And the more people you know, the better chance you have of putting something through.
To Mike's point, though, one of the many reasons we work with Mike at Luminate is that little extra effort. Again, Mike's a busy dad. He's a busy father. He's got a lot going on, but taking 2 minutes to pick up the phone to call that other agent can make a big difference. This is a human relationship business as much as everybody tries to say technology and everything else is taking it away. It is all about relationships, people, the human connection, calling the listing agent from Cub Foods or wherever you were. That's real life.
Yeah, the arcade with my boys. Yeah.
Yeah, that's real life, though. You know what I mean? And I just think you need somebody like that, a loan officer and an agent who's willing to do that, because that's what is needed in this market, guys.
Yeah, I mean, I will literally, if we have 15 offers on a property, over half of the agents will only reach out by email.
Yeah.
So they'll just email their offer over, with no connection, no discussion with me, nothing about their client. And I'm always like, if I'm that buyer, they're hitting. I'm cutting them loose.
Yeah.
Yeah. You got to make the effort. You want to try to form some kind of a bond or some kind of a connection. Like Ryan. Like I'll use Ryan's name if I don't know the agent, but I'll call Ryan and be like, "Hey, do you know him?" And I'll say, "Hey, Ryan O'Neill says hi."
Yeah.
Just something. So there's something to give you an edge.
Yeah.
Connection, Mike.
Or even to just explain your offer. Hey, my client's super flexible on closing date. Like that
That's
might
right.
not come through on a purchase agreement or on an email, but you can say, hey, this is coming over. Your sellers can pick the closing
That's
date.
right.
They're super flexible. So anything that my buyers can do to get their offer, they're willing to do that.
That's right.
Hey, it's been a fun show. We're already at the end here. I hope the weekend has been a good one. Hope you enjoyed the content. Please don't ever hesitate to let us know if you have a certain topic or discussion you'd like us to hit about the market. Adam Hartung, Midwest Money Management. Nice work, young man.
Yeah, thanks. I was just going to say along those lines of just working hard and the extra effort. Again, if you're someone that is worried about the direction of where your investments may be going and you're looking for someone that is going to put in the extra effort on your behalf to watch those investments, I think we do a better job than anyone. So
Yeah, I'd agree with that.
Great job. Brad Sanford, Farmers Insurance. Awesome. Scott Walmering, Mike Overson. Great show, guys.
Yep, you too.
Yeah, fun show. Thanks, everybody, for tuning in. Have a great weekend. We'll be back next week.
Mike, and I'll call you at 7 p.m.
Thanks. Thanks for tuning in, everybody. It was a fun show. Had a full house today. A lot of you watched the entire show, so thank you for tuning in. We'll be back next week. Great job, guys.
Yeah, you too.
Brad,
Thanks.
nice work in your debut.
Fun being here.
Nice work in your debut. All right, everybody. Signing off for now. We'll see you next week. Take care, everybody.